We should be.
Risk assets have had a solid start to the Asian session on the back of some fairly good manufacturing PMI numbers out of China yesterday, followed by some manufacturing PMIs out of the US as well, which came in better than expected, as well as better than expected ADP non-farm payrolls data. It certainly seems like international or global data is on the right path at the moment. After a long period of underperformance, a lot of investors out there are starting to feel that we have seen the bottom of economic data, particularly on the US and the China front. Unfortunately, on the European front, we do continue to experience some disappointment. Of course, now we've got the Greece issue that's yet to be resolved, and this is likely to drive the Euro's underperformance over the next few weeks. We do have that November 12th meeting coming up, where we do expect to see a full Troika report on what they've found on Greece and whether it will receive that next tranche of aid. Of course, there is a lot of noise ahead of that, and that has been responsible for most of the Euro's volatility in the past few sessions. Unfortunately, the pair continues to be greeted by sellers every time it attempts to get back to that 1.30 level. However, we have seen some strong performances from the Aussie dollar, particularly against the yen, which continues to be the favoured funding currency at the moment. We've got the Aussie dollar pushing through 1.04, clear for a move up to 1.05. Of course, it does seem like it's starting to price in a November rate cut on Cap Day. Of course, we will have to continue to assess local economic data to see exactly how much of an impact recent rate cuts have had on the local economy, and whether or not they're enough to warrant stability in the easing cycle at the moment. Moving on to the local market, we've seen a fairly strong start, currently up about 0.5%, particularly led by the materials space. Commodities came back from recent underperformance, with economic data showing some sort of improvement, particularly from China. Iron ore is now steady at about $120 a tonne. This has lifted the resource names like BHP, which is having a fairly solid day, up about 2%. We've got the likes of Fortescue and Atlas rising around 3%, which is also quite impressive. Of course, despite the recent stability in iron ore, it does seem like there was still some sort of skepticism around the ability of these iron ore miners to bounce back after that long period of underperformance. But it certainly seems like we're now in a steady recovery led by the materials space. Elsewhere, we've got a strong performance by Westfield this year. It's up around 37%. Today it came out with a third quarter update. It does seem like the company's maintained its earnings forecasts, with funds from operations of about 65 cents and earnings and guidance of about 45 cents for its distribution. So it does seem like the company is on the right path, and it has really been helped by its exposure to the improving US market. Of course, the retail space in the US has experienced about an 8.6% recovery, and this has been one of the main factors driving Westfield's earnings.